Hey there, welcome to the channel. So today is Sunday, March 13th, the Sunday before the week with the next Fed meeting. So let's kind of take a look at how things are setting up for the week. So first of all, if we look at Friday on like Brent crude, we can see that we had the oil market actually went up a little bit, went up about 3%. It had sold off pretty heavily 2 days before when it had just basically gone hyperbolic here after all the stuff started up with the sanctioning of oil and all this crap going on. But so this is one of those things that, to kind of keep an eye on is that at some point, is this basically at some point, do you have a run where it spiked and then maybe it'll spike and then that was it and it'll go off to some other area in terms of the chart? Or is this a situation where I'm drawing a poor trend line here, but is this going to be a situation where, yeah, it was the initial spike was way over the top, but then it's going to like settle out into some uptrend and keep going up for some period of time? Can't tell you, but that's one of the things just noticed that, it kind of found a footing. Oil found a footing on Friday. At the same time that oil found a footing, we had a sell-off in the market. If we look at our QQQs there, we see that we're down about 2%. And so we have this kind of like downtrend going as far as I can tell. We haven't put in a new low yet. We were lower a couple of days ago and then a week ago. So we haven't put in a new low on the Qs, but we're still kind of, heading down here. And also the same for the SPY here as well. So that's one thing. And then the interesting thing, though, too, is last week rates started to go back up. So here we have this dichotomy. The market started selling off. The Ukraine thing happened. Oil started spiking, and we get this sell-off in the yield, meaning that money was running from somewhere into bonds, buying up the price of bonds, hence knocking the yield down. But then that kind of reversed last week. And it's very interesting because the yields went up, right? The yields went up last week. At the same time, the market had some down days. So the market went down, the yield went down. So kind of interesting there. That implies that you're selling both bonds and stocks. So we'll see if that continues, but it's kind of interesting. So put the yields back up at about 2%. So looking into the setup for next week, we saw that oil, had found a little bit of a footing on Friday. And if we look kind of at the price that we're seeing right now, we're down 1%, looks like on the pricing that we're seeing on Sunday night here. That's one thing. But let's go ahead and look at what's coming up for economic announcements next week. Okay, so looking at what's scheduled for next week, if we look on Monday, I didn't really see very much, if anything, happening with economic events. But then we get the biggie. We have on Tuesday, we have the first day of the Fed meeting. And then on Wednesday will be the second day. And that's the day that we normally get the Fed statement. And this would be the day that we get the rate announcement. So this is going to be significant because this is the first time in a very long time that the Fed, we're expecting them to actually raise interest rates. Now, in many ways, there's sort of a double whammy here because on Tuesday, what is the current focus is inflation, and we're getting a release before the market open of PPI, producer price inflation. I guess the consensus here, as indicated by this, is 1%, which is 12% year-on-year inflation. So for what could end up being a quiet Monday, Tuesday, and Wednesday could have a lot of excitement in it. Now, it could be very positive or it could be very negative. I don't know. But these would be days to kind of duck and cover, maybe something like that. Because if the PPI comes in hotter than expected, that gives impetus to, the Fed being more aggressive about raising rates. It also just indicates that we haven't turned the corner yet on inflation. Everyone's looking and hoping, the Meek Kevins of the world are hoping for some kind of inflection in inflation. But I think most people are kind of like not expecting that at this point. We sort of know that, okay, the numbers that we got for core CPI, that didn't really include the effects of the Ukraine situation. So when that gets in there, we're going to see an even higher spike for sure. But we'll see what happens with this. So look for Tuesday and Wednesday, for the fireworks, because we have, the Fed will come out, they'll raise rates. I assume that they won't do anything exaggerated or silly or anything beyond doing the 25 basis point. Previously, I was thinking they could do 50 basis point, but the Ukraine situation, maybe they won't do that. Who knows? We'll see about that. Other things coming out are retail sales and housing market stuff. So, and then later in the week, we'll get housing starts and building permits. So here's the one thing that is, we're not there yet, but at some point the market tends to have like laser beam focus. Right now it's right on inflation, right? And it's on the Fed relative to inflation. The Fed, how much are they going to raise rates, et cetera, to try to, kill inflation, et cetera. But at some point, it's pretty clear out there that the Fed raises rates. They raise them too much, something breaks, the yield curve inverts, and then they cause a recession. I mean, it's just pretty much in the data, and it's pretty consistent that happens very, very often. And they haven't done a rate rising cycle in a very long time. So that's what you would expect. But so my point is, looking at retail sales, these are coming out on Wednesday, and and then also housing market index. And then on Thursday, you'll see some housing starts and building permits. So what I'm trying to say is that the next area of focus may start to shift at some point. It may shift. It'll be like, you can imagine if they do 7 or 8 rate hikes every 6 weeks, they have a meeting, another rate hike, and the market probably gets bored of it, whatever. And they just kind of going ahead. So you can imagine the next 4 or 5 months, maybe just kind of on autopilot with that to an extent. At some point, they're going to be hoping that they stop doing it. But at some point they might start, if the economy starts really slowing down, and the focus may change, and it's something to watch out for. Is it possible that the focus is going to change to like retail sales? Hey, retail sales, are they dropping? Is that a sign that we're heading into recession, that, hey, these rates are starting to kill things? Car sales, especially retail sales. And then also relating to housing starts, building permits. And then on Friday, you're actually going to get existing home sales are also coming out on Friday. So really the home sales, we're going to see if that's going to start bleeding into housing sales, retail sales, and general recession at all. So that would be the shift that I don't think it's there yet. It doesn't seem like the focus is there yet, but that's somewhere where it could go next. So that's something to watch out for. So I think that's it for this one. In a way, it's sort of like pretty historic meeting. It's been a long time since the Fed has been raising rates. I mean, they were raising rates before the pandemic, and they were doing that, and then they kind of got short-circuited by the whole cerveza sickness thing. So we will see what happens here, but this time is somewhat different in that they got really high inflation, historically high inflation, and this inflation is high even as reported currently. And you can go to Shadow Stats and other places like that, where the reporting is like, they've worked really hard to work the numbers, to work how they record these things, the adjustments they make to try to lower the reported inflation. I mean, if you do any kind of financial stuff, I mean, to me, it's just very, very natural. It's like, okay, look, if you're doing financials or whatever, like companies know. And they know, like, okay, well, what are our earnings going to look like next quarter if we do this? What if they look like in the next 2 quarters if we do this or do that? And they can literally make changes to what they do to help the numbers look the way they want them to look. And that's the same kind of thing that, BLS can do. I think that, it's very interesting because there's a lot of conspiracy theory about like, oh, the government is faking the numbers and whatever. Well, I'm pretty sure the government, and I know, Smoking Joe doesn't want to be reporting these numbers. 1% at a month over month is horrible, and it's not doing him any favors. So I think that it's pretty clear that they have a methodology. They will change their methodology, and you can debate whether that's legitimate or not. And I think there's a lot of reason to believe, if you look at Shadow Stats, there's a lot of reason to believe that they've changed the methodology to understate inflation as much as possible. However, they just don't go and manipulate the numbers. They'll change their methodology, they'll adjust it, they'll try to do whatever they can to kind of keep that down. But at the end of the day, they can't really just change the numbers. They got to live with what it is based on the methodology that they picked. So I think that's it for this one. So should be a fun week. Happy trading. Bye.